Hey, in this video, we're going to discuss what a FHA home loan is and also how it works. Did you know, according to the FHA annual report for 2022, 83% of all borrowers that got an FHA home loan were first-time home buyers. And guess what? That can be you. So in this video, we're going to break down what a FHA loan is, how it works, how to qualify for an FHA loan, and how it can be beneficial to you. Most times, people, when they want to buy a house, they go to their local bank, and their local bank most likely is a community bank, or it's a Chase, Wells Fargo, PNC, these types of banks. And they go in there and they apply. And what happens is, if the borrower or the potential borrower doesn't have a credit score that is over 680, or they don't have a 20% deposit or 15% deposit, then most likely they will not get qualified. So now, because of this issue, we have a lot of people that make good money, that have a decent credit score and have some money saved, and they want to qualify. So this is when FHA steps in. And what this does, it allows people that has some money saved but don't have the 20% saved to qualify for a mortgage. It allows people with a lower credit score, let's say if your credit score is a 500 or 550 or 600 or 625, you can still qualify for FHA. FHA is a government-backed mortgage insured by the Federal Housing Administration. So the government insures all these loans. So even though these loans are insured by FHA, these loans are not administered by FHA. These loans are administered by your local bank. So if you go to Wells Fargo, Chase Bank, etc., you can ask the bank if they have FHA programs, and most likely they do. So next question is, how does FHA loans work? So as I've said before, these loans are for people that have a lower credit score, anywhere from like a 500 to 680, you can qualify. And if you don't have the 20% deposit to put down on the house or the 15% deposit to put down on the house, you still can qualify. All you need is 3.5%. To save up money to put down on deposit, to save, 3.5%, you can easily save that money. You may have to give up your car. You may have to stop eating out food. You may have to cut some expenses to save to put down that 3.5%. FHA loans come in 15-year and 30-year mortgages, fixed interest rates. There's, as I've said before, there's flexibility in the underwriting standard. They're designed to ensure that people that have a decent credit score and have some money saved and who's working can qualify for these loans. Now, there is a caveat. Just because you qualify for FHA, there is a requirement that these borrowers get FHA insurance or FHA mortgage insurance. This guarantees the lender that if the borrower does not make these payments, then the insurance will kick in. The insurance will cover the lender for not paying their monthly payment. This type of mortgage insurance is required for all loans, a deposit that's below 20%. So if the deposit amount is 15%, you're required to get insurance. If it's at 10%, you're required to get mortgage insurance. But if it's above the 20% threshold, you're not required to get mortgage insurance. Now we're going to go into how to qualify for FHA loan. If your credit score is between 500 and 579, you must put down 10%. If your credit score is 579 and above, you can put down 3.5%. Now, as I've said before, get your credit score above the 579 threshold, because if you do that, then you can put down a lot less capital. It may take you 3 to 6 months to get your credit score higher, but I think it's well worth the time and effort to do so. Go on YouTube and figure out how to do it. It's really easy. Next, you need verifiable income in order to qualify, okay? So pretty much you're gonna need your most 2 recent pay stubs to qualify. Not only that, you're gonna need the last 2 years of taxes. Your taxes has to show you made some income. If you're a W-2 employee, you gotta state that you've made some money on your income taxes. You can't give the banker $5,000 or $10,000 worth of income made that you've paid taxes on. No, you have to pay taxes on $40,000, $50,000, $60,000 in order to qualify for FHA. Even if you made $20,000 or $30,000, that's fine. Have a decent amount of income that you pay taxes on the last 2 years. And what they do is, even if one is higher than the other, they'll average out both years and give you an average amount. So still submit them if one is higher than the other. Another thing is you must use the house as your primary residence. But what a lot of people do, they'll buy the home, they'll most likely live in the home for a month or 2 months, maybe 6 months, and then they'll rent out that unit. That's what you do. Some people, they don't even rent out the unit when they buy the home, to be honest with you. They go right to renting out their unit. I've never heard of a banker or a representative from the bank reaching out to go to that home to make sure that the person that got the loan is living in the house. It rarely happens. I've never heard of it happening. But at the end of the day, the rule is you must use the home as a primary residence. Another thing is the appraiser has to be a HUD approved appraiser. So don't think you can hire your own appraiser to go out there and appraise the house you're looking to buy. They will get an appraiser for you. Lastly, your debt ratio has to be 43% or better. That means that all the expenses you have over the month, and you're going to divide that by the amount of income you make that month, and you'll have your debt to income ratio. Banks use that in order to be able to pay the monthly mortgage every single month, and also your other expenses that come along with owning a house and just living. They make sure that you can afford all those expenses. Now, please be aware that a lot of folks, a lot of sellers, or some brokers don't accept FHA funding because of the amount of time it takes to close. Sometimes these closings can be 60 days, 90 days, 120 days for whatever reason, okay? Sometimes the appraiser may come back with a lower appraiser amount that may be different from what the seller appraised value is. And so that discrepancy is there. So sometimes that'll kill a deal. And now the seller wasted their time, and pretty much you wasted your time too as well. So some brokers don't, some real estate agents and some sellers don't like to work with FHA loan. But don't worry, it's a bunch of homes out there. You will find a broker and a seller who will approve for your FHA loan. So don't worry about it. You will get it done. Now, another thing is how to apply for FHA loan. Pretty much, you want to make sure you have all your documentation ready to go, okay? That's your taxes, your pay stubs, make sure your credit score is in order, and any other documentation that the bank is asking you for, have that ready to go in the folder. Another thing is get pre-approved by multiple lenders. Please go through the whole process with 2, 3, 4 lenders, because you may get most likely you're going to get approved for different loan amounts, which can give you more options when it's time to submit the offer. And lastly, know your budget and know how much you're ready to spend for a house, okay? If you say $10,000, you know that you have to put down 3.5% of the house. You can't look for a home that's $450,000 or $500,000. No, you gotta look for a home that's $200,000, $300,000, within that range. Make sure you have everything ready to go for FHA. I hope you learn what FHA is, how it works, etc.